Hey folks, it's Simon here with your Tao Market Outlook for the week beginning Monday, the 29th of September 2025. S&P had its first three-day losing streak last week since August. Despite that three-day losing streak, the S&P is currently up about 2.7% month to date for the month of September. So the spooky September seasonality has not come about this year. Now, one thing I want to highlight about this move is we have had a classic reversion to the mean. We got extended and we've pulled back to this mean, this white line in the middle here, the tram tracks. And every time the market has done that, since this April swoon we had earlier in the year, it's actually proven to be a pretty good buying opportunity. All right, the market has bounced off this level each and every time. So the question remains, is the market likely to do the same thing here? So just a few things worth checking out. One thing I always look for is what are the semiconductors doing? There tends to be a bit of a leading indicator. Semiconductors are up here hanging out at all-time highs. If they're leading, generally the market is going to follow. Let's have a quick look at the dollar. The dollar here put in what was looking like a pretty promising rally. We rallied for almost 2 weeks. Now it looks as though it's encountered this little downtrend line and maybe set to reverse lower. Now, if the dollar is going to continue lower, that just adds tailwind for risky assets like stocks. Not only are semiconductors performing well, but small caps are playing catch up as well. And if we look at a monthly chart here of IWM, man, you know, this could be looking at a multi-year breakout sort of in play here. Now, if small caps do break out on the monthly chart, guess what? S&P is unlikely to be sitting idly by on the sidelines. Now, small caps can certainly outperform, but if small caps are outperforming, we are generally in a risk-on environment. Now, looking here at the number of stocks trading above their 50-day simple moving average, it's rebounded back up to 54.5%. So more than half the stocks in the S&P 500 are in a medium-term uptrend, and it's certainly rebounded from levels that would imply the market has got higher highs ahead. If we look at market breadth, there's been no divergence in the advanced decline line. That is just tracking new highs with price. All right, so everything on the charts looks pretty good. One thing I do not like is the put-call ratio here. That is getting really extended. Everybody's long in that sort of an environment. The market is primed for a pullback. Also sticking with options market dynamics, we've got a lot of dealer positive gamma positions expiring tomorrow at the end of quarter expiration. That would free the market up for more movement. Doesn't mean the market necessarily has to fall, but we could certainly see some increased volatility. And of course, we've got non-farm payrolls on Friday. That has always got the potential to feed into market volatility as well. So all in all, looking at, again, focusing on the S&P 500, this could be the beginning of another great bounce higher. We just need to stay nimble, particularly this week. That's what I've got for you. I hope it helps. Thank you for tuning in, and I will catch you next time.